At market open, volatility increases, price action is clean, and this is when the best setups appear. By defining the opening range, whether we use the 5, 15, or 30-minute, traders can set clear levels for breakouts and retests. If you want to learn a consistent low time frame trading strategy that you can use to scalp trades every single day, then you found the right video. A lot of trading videos are just talk, but we're gonna get straight into it, no BS. Here's how it works. Open your chart, and then start by marking out the 5-minute opening range. To do this, wait for the first 5-minute candle close after the 9:30 New York session open. Then, mark the candle's highest price point and its lowest price point, just like this. Here we go, we've established our first opening range. Now try dropping down to a lower time frame, like the 1-minute chart. You'll notice that the same 5-minute candle we started with is now made up of 5 individual 1-minute candles. Typically, this strategy will be focused on using the 1-minute time frame. So now I'll show you how it can be used to set up a real-time trade. From here, we're going to be watching the market to break above the range high. This will be confirmed by our first candle close outside of the range. If price returns to the range after the breakout and tests the same level as support, the retest is then successful, and we can look to take a long position, betting on the price continuing higher throughout the day. However, price doesn't always break upwards from the opening range. In a bearish trending market, it will often move downwards towards the opening range low. If this is the case, we will instead wait for candles to close below the opening range, confirming our breakdown. What you will notice next is that price commonly returns to the opening range low. When it does this, we will look for it to find a newly created resistance at this level. On this retest, we can look to bet downward with an edge that the day will continue to sell off. In either scenario, we can target a 1-to-2 or 1-to-3 risk-to-reward ratio. Now that you understand the basics of this strategy, I'm about to share with you how to do the advanced part, executing these steps in a dynamic, real-time setting. Here we're on the 1-minute chart. Here we can see a local uptrend as it's making higher highs and higher lows. Once it's 9:30 and the New York session opens, we wait for the 5 1-minute candles to form. After the last one closes, we're going to mark out the lowest and the highest points and establish our opening range. Now, here we can see that price has traded into the low of the range, but it didn't quite break out of it. Instead, it wicked through and then went back up. Once price got close to the range high, we see that it traded back down with a lot of momentum. This movement established a fair value gap. We can enter on the retest of the opening range low, combined with the fair value gap confluence. We can set our stop above the high and aim for that 1-to-2 or 1-to-3 risk-to-reward ratio. But let's look at this a different way. Here we have a sideways market. It's not very volatile. It's just chopping up and down, stopping out traders that enter too early. Right before the 9:30 session open, we can see that price went and swept these equal highs right here. After the session started, we got a big sell-off to the downside, with this candle closing below the lows, signaling bearish momentum. After our 5 minutes have passed, we now have our opening range again. Here, price traded down to support, and then sellers broke the local swing low. But there was no displacement, and price went back up once again to this high and swept it. Then it moved back down again and broke our swing low, and this time with displacement. In this scenario, you want to wait for a retest into the opening range low and the overlap with the newly created fair value gap, providing confluence. Once this is achieved, we can look to enter a short position, setting our stop above the high and again aiming for a favorable risk-to-reward ratio. There may be some terms used in this video that you're not familiar with, like fair value gap, equal highs, displacement, and others. To help you with this, you'll find in-depth videos on each of these topics and more on our YouTube channel at youtube.com/TomCrown. If you found this video helpful, I ask that you please share it with another trader that might find it helpful too. Make sure, as always, to smash the like button and subscribe for more.